Hey guys, this is Ravi Padmanabhan here, investor and a stock market trainer, and I'm going to look at valuations of one company, and we will be discussing the same right now. The stock today, which we are looking at, is in focus, is Avenue Supermart, which is actually owning the brand of supermarket called as DMart. So some of you would recollect that DMart had come out with an IPO couple of years back at around 300 rupees. Today, the stock price is trading at 4,900 rupees as on October 2021. So let me look at analyzing this and figuring out if the valuations are reasonable. So let's look at this. So DMart also announced its results. So if you look at the current valuations of DMart, as you can see that the market cap of the company is around 3,16,000 crores. The current price is around 4,900. But the key thing you need to understand is that if you look at the trailing PE of the stock is trading at 231 P, which is quite high. But does this company deserve such high valuations? Yes, but you need to remember, what are the reasons why the stock is trading at a very high PE? Is because one of the things is this is one of the best owned stocks, one of the leaders in the space. And you can see that the stock has given a consistent return from profitability of 60 crores. It has gone up to around 1,374 crores in the last TTM. But the key thing you also need to understand is that the reason why the stock is holding to such high valuations is that the promoters are owning 74%, almost 75% here. The institutional investors are having another 10%, so that makes it 85%. And the domestic institutional investors like mutual funds are holding around 6%. So this makes around 92% stake is held and 2% is with the public. And this also is you will find that Nabil Noranha is holding around 2%. So there is a less floating stock. That means only 6% of the stock is being traded. And obviously some of them would be employees, some of them long-term investors. So ideally 50% would be long-term investors. So this 3% of the floating stock is there. And because the prices are rising, most of them are not selling. So this is basically a very low floating stock which is there. And that is actually making the prices hold on. But if you really ask me, does the stock deserve such high valuation? Is it right to enter the stock price now and expect a profit over the next couple of years? I would not say so, because what happens is if you look at the number of stores, for example, if you are seeing the DMart as a brand, and if you see that number of stores, you can find that the company currently is having around 234 stores. And even if you give a value of 1,000 crores per store, which is quite high, the market cap valuation is 2,34,000 crores, which I think it's trading at very astronomical valuations. I would be very cautious. If I'm holding DMart shares, I would rather look at selling it in some parts now. Even if I'm a long-term investor, I would consider partially looking at exiting here. I would definitely not recommend investors to enter the stock now, because I would say valuations are quite high, even if the company continues its huge amount of growth. If you look at what is the PE has been consistently rising, and you can see that in terms of the PE chart for DMart over the last several years, the PE was been consistently on the higher side. But I feel current PE valuation has run up a lot. I would say probably the stock could drop from the current levels of around 4,900 levels. I would say we can easily see that a 25% correction might be possible at any point of time. So be very cautious at high valuation stocks. So I know that I am taking a big risk in telling all these when the markets are going up, because sometimes what happens is bull markets defy all rules. We have seen it in year 2000 when tech stocks were ruling the roost. Infosys, Wipro, they were all trading at triple digit Ps. And we know what happened when you enter very high price stock, you will spend long time in terms of the P compression when it happens. You might be seeing the stock going sideways and testing your patience. So yes, sometimes if a business is very good, understand that great businesses should also be available at fair valuations. But when you overpay, you might end up when waiting in this business for a longer period of time to deliver the returns. So this is my word of caution to you out there, guys. So take a call, do your own research, and keep following me if you want more such updates on specific inputs on stocks. So I do it out of my passion, and my uh, objective is to share this info to you before you take an informed decision. Always consult your financial advisor. For more such inputs, keep tuned to our channel and subscribe to our channel below. Thank you, friends. Bye bye.